Good morning and welcome back to my channel. I'm Aarti Kumari and I'm going to talk and explain about the concept of microfinance. Microfinance refer to the provision of a small scale finance service which basically include like credit, saving, insurance and many other terms that all combine under and comes under the microfinance. It's give the lower income individual and the group who traditionally have access of loan. Basically this microfinance help the lower income individual to having their access of loan. There is a microfinance and the microcredit. Well, if we talk about this both term, they are interchangeable, but it doesn't mean the same. The microcredit is only one component of microfinance, and the microfinance is a broad ecosystem of a finance which include a broad just not about the loan only. Let's also understand the objective of microfinance. Like if we talk about their goal and impact area, the first one it's reduce the poverty. Basically, the small consumption pattern used to be increased, and they are able to manage their risks and make a proper stability for the household assets. Now, then secondary, it's also impact the income generation, like they provide the capital for the micro enterprise, for the new startup, and for the assumption and have the growth for the long term also. Then employment empowerment, like it's also improve the decision making power, and it also help to generate the economic status with the other communities. If we talk about the finance and inclusion, like it's bring about and break about the make a strong financial system and employment, like it's also help for the self-employment who are the self-employed having their own startup or the sole proprietorship, they are boosting them and making it. भाई भी तो वही भइल बा. Now we will see the delivery models. What are the delivery models in the financial microeconomic? Like the first one is the self-help group. It is basically a member-owned saving group linked to the bank from credit access. Basically, there is a group of 5 to 10 members used to be have a pool, and they used to collect the money, and they are directly linked to the bank. The second one is the joint liability group. Here is the small group offering mutual guarantee to reduce the default risks. They are founding a group and they all have a joint opinion for the one, they are becoming the grantor to the each other. Then the individual lending is like a direct loan assessment and the term for the individual entrepreneur who are basically they are founding their own startup, having their own shop as a small retail. This is basically for them to having the lending. Then the bank led model, in that like it's directly a bank helping the business to reach basically who are in the remote area and who are in the rural area. They are having access and easy way to have that loan from the bank. And the digital and the fintech leading like leverage mobile technology and the digital score for low cost outtake. Like for example, if you are taking the loan directly through the fintech or directly through the digitally with the help of the apps, that also reduce the term of the interest and help for them. Coming to the summary part, the takeaway and the impact of the broad concept of this microfinance is to understand the microcredit, and which include the saving, insurance, and the loan. Then the core aim is that the primary objective is to reduce the poverty, making human employment and the sustainability employment creation. And after that, if we talk about the delivery model, there is a multiple delivery model which reduce and help bank to having the easy way, smooth flow of the loan. And the success factor is that the impact to the ruler and boost the client protection, financial literacy, and make them a digital involvement through the bank. Thank you for watching this video.